let's get right to Paul Schatz, President, Chief Investment Officer at Heritage Capital. Paul, election day, it's tomorrow. I know we can't time the market. You're watching some of the historical trends that could help investors prepare for tomorrow's action. Tell me more.
Bottom of the ninth, 2 outs. It's been a long year. It's been a long election cycle. Everyone's got fatigue, but the election is a known event. Unlike when cowards flew planes into buildings in Manhattan, the market wasn't prepared for that. The markets had days, weeks, months, quarters to prepare for tomorrow. So for anyone to say there'll be any surprise, whether it's tomorrow, Wednesday, or next week or next month, it's foolish. If you look in the options market, you just mentioned the VIX. The VIX is elevated. Last I looked, it was above 38. Implied volatility in the market is elevated. It's at premiums. So there's an awful lot of investors who are hedging their bets and positioning for volatility and multiple outcomes. I liken this to Y2K. We knew it was coming. There was no doubt. People had ample time to prepare. And what happened on Y2K? Markets rallied. What happens when we know something is going to happen in the future? Whatever the market does into the event, the opposite usually happens after the event. In this case, stocks have been declining. And my thesis is, whether Friday was the low or there's one low tomorrow, stocks are going to rally out of the election.
Yeah, absolutely. But it's interesting because you think that we'll see a bounce back and markets will continue the trajectory to the upside that we've seen really over the last decade, but it could be some time, right? You have to wait for the decision. You have to wait for it to filter out. Is when we talk about the markets, I'm not really interested in the political views, but what could happen to the markets in the next 4 weeks, 8 weeks?
So we know historically, in 2000, when we didn't know for, I think it was 5 weeks, who our president was, stocks declined 4 to 6%, depending upon the index you look at. Today, we know either Biden's going to win or Trump's going to win. The Senate, we probably won't know or may not know till the Georgia runoff in January. That's the wild card. Even if there's a contested election, even if no one gets 270 electoral votes, the House picks the president, the Senate picks the vice president, all that is known. The market has had ample time to prepare. So I would subscribe that on any of those outcomes, the worst case you get is a single digit, low to mid single digit decline. But listen, let's not sell the market short. In the throes of COVID, the market started melting up. So because everything became known, and there was that body called the Federal Reserve who said essentially, whatever it takes, we're going to keep capital and credit flowing. So I think this time is somewhat similar. Powell's not stupid. He was just on the cover of Barron's. They know that there's a tremendous amount riding here and people are worried about outcomes. They're going to feed liquidity into the markets.
So when you talk about a pullback, do you see that as a buying opportunity? And if so, for what? What would you buy?
I absolutely think, regardless of who wins or how it shakes out, the markets are going to rally. They may rally, different sectors may rally depending upon who wins the Senate. The Senate is the linchpin, not the president. So I think the best thing investors can do, the single most important thing, is watch for what the reaction is sector-wise, not who wins or who says what or what happens, but watch what the reaction is in market sectors. I'll say this, the media kept blaming COVID for the recent decline, but what got hit the hardest in the last week to 10 days? The stay-at-home stocks and the big cap tech stocks. Something is amiss in large cap tech. They no longer are leading. They no longer are trading well. Some of the stuff that I like may be a little contrarian. I like some of the infrastructure and rebuilding plays like ECL and Mohawk. Some of this, and even, listen, Uncle, even energy. Energy and banks left for dead, decimated on the year. All of a sudden, they're picking their chin up a little bit. They probably get some tax loss selling later in the year, but let's not ignore what's been beaten down in anticipation possibly of the election and what could come out of the election smelling a little better than it smelled in a long time.
Yeah, all right. So we'll watch for names like ECL, Ecolab, and Mohawk, and some of the others. Paul Schatz, thank you.
Thank you, Nicole.
Get ready, right? Paul Schatz, President, Chief Investment Officer at Heritage Capital. Thanks, Paul.